Hey there traders, welcome back for episode 29 from the stockbandit.tv. I'm sure glad to see you here. Now the simple fact that you're watching this video right now says a lot about you. It suggests that you're a self-directed person and that you're eager to take the reins with regards to your money. And a lot of people out there right now just don't have that same mindset, and what they're doing is trying their very best to ignore these conditions which their portfolio is likely mimicking. They're hoping that the longer term will bail them out, and this big bad ugly bear market just continues, and what they're generally doing is just accepting whatever happens to them. And so I personally am really glad to be a trader right now and to not have to accept that mentality, and I'm also glad to be around people like you who think likewise. So sorry about that little detour there, but let's move on. Anyway, in this episode what we're going to talk about are the bases in the charts and what we might expect for them. So, every chart pattern has some implications for the move that it might produce. You probably know that as a technical trader, and I've got a link in the blog post here to point you to a list of chart pattern pages which are going to include all of those and the implications as well. However, we can compare a couple of different sizes of bases or consolidation areas on the charts in order to get some idea of whether or not the current base is of great importance or just of some short-term value. So let's take a look at a couple of charts here, and I'll kind of show you what I'm talking about. The first one is HUM. Now this is kind of sort of sitting in a bear flag type pattern here. It's had a very swift move down. It's tried to consolidate or build a small base here over the past few days between these two trend lines, and that has formed over the last few days. Now this is very short term, and it could lead to a continuation move down, yes, but it's not like this pattern is really going to make or break the current trend, because already the trend is decisively down. Now on the other hand, we've got a stock like SPN. Now this one is sitting in a very large base here that's been forming over the past several months, so much more than just a few days. This is one very large base, and we see an incredibly important support level here that this stock has been respecting a number of different times throughout the course of this entire move. And so what happens here is you get a confirmation of this pattern with a downside break, and that might be the technical start to a new downtrend in this big picture. So this kind of a base is really of great importance when price moves out of it and confirms that pattern. Now personally, I like to trade both kinds of setups, and what I'll tend to do is just specify my time frame for the trade based upon the size and the duration of the pattern or the base that I'm watching. Now keep in mind that I'm not making any suggestions on these two particular stocks. I'm simply using these charts as examples to help relay the lesson that larger bases tend to have greater long-term implications, and smaller bases tend to have much more meaning in the very near term. Alright, so thanks for joining me as always. Be sure to subscribe to the videos and or the RSS feed if you haven't already. I will see you again soon with another video, but in the meantime, trade like a bandit.